You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. News breaking, of course, with regards to the Reserve Bank of India and what they want to do with incremental CRR. We'll get to that in just a bit. With me, my colleagues Reema and Surabhi are here in the studios. Guys, hi. It's pouring outside and it's pouring
Gains here, pouring.
It's a fantastic Friday. I think the second Friday running where the bulls are completely ruling the street. And of course, we'll talk more about that. We're what now? Less than 1% away from
140 points, right?
The all-time high.
19,850.
Yeah, I mean, 19,992 is at all-time high. Nigel, of course, is joining us from the newsroom floor. Nigel, hi.
Hi, well, looking good, right? Nifty Bank at the highest levels we've seen since August 2nd. So that was the booster shot we required. And maybe the next couple of sessions, 20,000 is going to be there for the taking. I'm betting on that. Let's see how it goes.
Absolutely. So just a couple of points, right? I mean, the march upward continues. The Nifty is up 120, 130 odd points. And I think it's got a bit of a boost coming from banks. And Lata will join in just a bit with some experts as well. So you've got the all-time high, which I think is at 19,992. That's the next logical target. Nothing really between where we are now and the all-time high. The Nifty Bank, that is almost, it's actually across the 50% retracement of the 20th July to the 31st August, 20th July high to the 31st August low. And the next level there is, okay, I think we've crossed it. I started with, before I came in, I put out the number 45,312 is a 61.8%. The golden retracement of the entire fall, that's gone. And I think most of it has happened in the last 10 minutes or so since that news story broke. And mid caps and small caps, no problems at all. The small cap index did 4% last week, and I think we're on track for some at least 3.75% gain right now as well. So it's banks which I think are making all the difference. So let me get in Lata, who is here, and I think we'll have a couple of reactions as well. Lata, this is good news, long awaited.
Oh, absolutely. I mean, which bank would like to raise money at 5 and 6% and keep it idle?
Yeah.
It was a huge punishment. CRR is, I mean, one of the ugliest words in the banker's lexicon because it's a punishment ratio. And hence, SLR is earning you some money. You're putting your money in government bonds. CRR is keeping it idle, and that came out of the blue. The 2,000 rupee notes, like I've been saying, were called back on May 19th. Nothing was announced by the Reserve Bank. Everyone knew that many amount, 3 lakh crore or something will come back. But they didn't do anything in May, they didn't do anything in June, they didn't do anything in July. August 10th, out of the blue, for all the money that's come back, all the deposits that you have got, you have to keep 10%, was a bolt from the blue. And there were, like my poll indicated, the market was not sitting on entire hopes that it will entirely be called off. There were a good 30% which said it will be retained 10%. 50% said it will be brought down to 5%. Now, it's been brought down, yes, only by 7.5%. But within a week, it's going to 5%. And within a month, it is going to be 0. That was not in the books of anyone except all but 20% of the people who said that it will be reduced to 0. I mean, right now, they will change the instrument. And if there is a liquidity gush, they will absorb it through other instruments. That was all of 20% of the people who called. I'm not counting myself. I voted with them. But obviously, I was not one of the bank bond respondents. But it's, I think, extremely positive. From a banking sector point of view, bond dealers will be happy. But liquidity will be squeezed out by the Reserve Bank.
We actually have Lakshmi Iyer who's joined in. We'll get some more experts as well. So let's get some reactions in as well. Lakshmi, hi, good afternoon. Phased exit of this ICRR. Your first thoughts? Lakshmi, can you hear us?
Well, I think we will redial Lakshmi and maybe go to Mr. Ashutosh Khajuria of Federal Bank. Mr. Khajuria, how does it feel? Is it a relief? Your reaction?
Yeah, I think for any banker it would be a relief because it was a cost item. Of course, because of the deposit of 2,000 denomination currency notes in the form of deposits rather than merely for exchange had definitely increased liquidity in the system. And on the other hand, it's a fact that during festive season, starting from Ganesh Chaturthi and going on till Christmas or so, there would be a need of more liquidity in the system because part of it would get leaked through increase in circulation of currency notes. So despite all that digital transactions you know, I mean, your UPI transactions crossing 10 billion in the month of August, it's still there would be a need for currency notes, you know. So I think
absolutely.
Nobody was expecting it to, you know, be withdrawn one shot on 8th of September, effective 9th September. So it has come in a, you know, there is a glide path, and by 7th October, if it is, you know,
restored completely.
Status quo ante, and I think it's a good news for bankers.
Very quickly, Mr. Khajuria, do you expect now bank deposits to get a little saner? We saw some competition from the banks borrowing at 7 and 8%. Attracting deposits at 7 and 8%.
As long as it's a competition amongst the banks and that is pushing the rates up, ultimately it is not impacting the liquidity. The thing is whether the deposits are getting created out of the second phase of credit growth. So you have credit growth which gets followed by deposit growth, because credit itself creates deposits.
Of course.
Whether they remain in banking system or they go to mutual fund industry or insurance or other competitors in financial sector is, something which bankers are, more, I would say concerned about or preparing themselves for. So
absolutely. I agree with you. For them, the more important part is whether it goes to mutual funds or insurance, at least it remains within the banking system. It's going from one account to another. ICRR was taking it away from the banking system. Point taken.
Yes.
Lakshmi Iyer, I think, is back. Yeah, absolutely. Impounded. I agree. And not earning you any money. Lakshmi Iyer is back with us. Lakshmi, reactions, especially as a bond dealer?
So, Lata, on your poll also I mentioned that a calibrated withdrawal seems to be the need of the hour, and I think that's exactly what they have done. And it's good because from the time this was announced, that incremental system liquidity has actually receded. And if they would have continued, then it would have meant a much tighter, third or fourth week of September in terms of liquidity, which probably may not have gone too well. So I think this is pretty much in line with expectations. No major reactions in the market yet, but yeah, I think it's a step, in the right direction. More for the short end of the yield curve, which will kind of, cool off a little bit, but nothing very substantive, given that we have the advanced tax outflows as well.
Okay. Is there some minor benefit for NBFCs who may be borrowing maybe at the shorter term, or it doesn't even go up to the 1 year in terms of impact?
May not really go too much up to that level as such. So I would say it is broadly neutral to status quo. Small psychological impact at the very near end.
Okay. And would you expect that there will be more VRRs announced? The current variable rate reverse repo for 14 days again looks like almost a bomb. Only 18,700 crore has been attracted when the asking amount was 50,000 crore. So you expect more VRRs to be announced, shorter term ones?
Yeah, I think, as I said, once we have the advanced tax out of the way, once that system, assessment happens, what kind of spending is happening in the system, I think that, quantum can be calibrated. But I think looks like that could be the part of the system.
Okay. Thank you very much, Lakshmi, for joining us with your quick take. Do we still have Mr. Khajuria with us? Mr. Khajuria, what could be the impact on a bank's margin? Since this has been for about 2 months of this quarter, does it shave off about 3-4 basis points from your margin this quarter?
Yeah, about 2.5 basis points for our bank. Probably same would be more or less for the entire banking system, 2 to 3 basis points.
Yeah, I would expect a little more for HDFC Bank since, unfortunately, the merger happened at that time. They had a
merger has happened, so their NDTL has increased sharply.
They have grown. Yeah. Okay. All right. We leave it at that, Mr. Khajuria. Thank you very much indeed for joining us. So we are going to see a little bit of a little bit of impact on bank margin, but I think that's what would have already been there in the price. What's all of 2 to 3 basis points?
If you look at the Bank Nifty, we saw the sharp spike. It's while we were having the conversation, I think the Bank Nifty has climbed down some 200 points. You can see that.
I didn't do that.
No, I didn't imply that. If you could do that, you could pull it back up by 200 points. So we can, I'd urge you to do that. But anyway, we're at what, 45, just under 45, 200 at this point in time. How should you position yourself in the last hour of trade? That's the question. Then Mitesh is with us with exactly that. Mitesh, since we were talking banks, why don't you start with the Nifty Bank? Any trades there? And then what would you do?
Afternoon, Prashant. Yesterday we talked about the Bank Nifty suggesting a buy with a target of 45,050 and then 45,350. I think it's been met. We have just booked profits, I think, a few minutes back. It's not a bad chart per se, but I think, the Bank Nifty, which has been underperforming, my worry is that you will see at every pivot, you will see some kind of supply emerge for the Bank Nifty. And I think that's the way it's going to play out. So now I think a fresh entry should happen closer to about 44, 850, 900 zones. And we'll keep a target of 45, 350. And then once that is crossed, 45, 675 is what I'm looking at, but not beyond that. So to me, the Bank Nifty remains an underperformer. There was an event which played out nicely, which played out positively. Take your profits, wait for dip to enter. It is not an index which is going to run away from here. So I think, you will get this pullbacks at regular intervals because it's underperforming. So I think that's the way we'll approach the Bank Nifty. And on the Nifty also, it's met the target of 19,850. Therefore, we've taken exited positions there as well. But on the stock side, still trading with long buys. I have, in fact, a buy on Chola Finance, which I would recommend buying with a stop at 1155 and look for targets of around 1206 to 1210 over there. And the OMCs are reversing after some kind of consolidation and correction. So IOC is what I've picked up. That's a buy with a stop at 92.75 for targets of 96.5.
Okay, got that. Mitesh, thank you very much for all the trading calls over there. We'll come back to you in some time to get a little more. By the way, we've discussed banks at length, and that's one part of the market that's been soaring high. Have to point out three more stocks for you because they're a story in themselves. One is Coal India, the second is NTPC, and the third has to be L&T today. Just a minute to explain what's been happening here. The rally in Coal India, I mean, it's one of the most dull stocks, or was one of the most dull stocks on the street for many, many months. But look at it. I mean, Coal India is up about 19% this week, 22% this month. I mean, the bulk of that has happened this week itself. It just continues to ride on momentum. Look at the other one, which is NTPC. NTPC is sitting at a 15-year high. It's probably all-time highs, live highs for the stock as it continues to march forward. It's put on about 5% this week. It's been, by the way, the second best-performing stock on the Nifty this year. What's the first best-performing? That's Tata Motors, and number 3 is L&T. So coming to the third best performer on the Nifty this year, Larsen & Toubro. That's been another big sort of leg up for the bulls today because L&T itself is up 7.5% this week. It's, of course, gaining more on the back of all that excitement around the Saudi Aramco order. So these are some more names. Reliance is kind of contributing as well. Bharti Airtel is contributing today. It's just an out-and-out bulls day on the large cap screen as well. With that, let's welcome in our next guest on the show. We have Prakash Diwan joining in. Okay, before we get to Prakash, we'll just bring him in just a bit. But Nigel, you want to come in? I mean, what a move on these large caps today.
Yeah, indeed. Just a quick couple of points on Coal India. The operational performance that came out was very, very good. They seem that they're on target to see some growth. The street was a little bit worried whether or not they're going to grow or not, but the volumes have been fairly impressive. Point number one. Point number two is we're talking about a power deficit. So power demand has been quite strong. There's a lot of focus on renewable power. Yes, renewable power is increasing as a percentage of the total power generation. But thermal power generated, it's constant at around 73%. So it's maintaining its market share out there. Volume's good. Power demand is good. That means, coal demand will be good. And if coal demand is going to be good, then in fact the e-auction prices as well will get some sort of a base. So the street likes all these factors. And just to throw it in there, valuation-wise trades at around 4.5 times. You have a dividend yield as well in there. So all those factors put together explains why Coal India, I don't remember it's never happened in a single week. Coal India up close to around 20% odd. Clearly, those ESG worries are being brushed aside and the street is quite positive. Prakash, what do you make of this one? Coal India, the dull stock, only a dividend yield play. Well, it says, no, I want to put my hand up and get counted. How do you view the stock at around 280 rupees? Bulk of the good news in the price?
Kind of. I don't know if you recall about a week, 10 days back, we'd spoken about why the next move from, beyond the power stocks is going to be in the miners and particularly coal and NMDC and Hindustan Copper. Coal is something which is not, you can't, as a nation, we can't afford to ignore the contribution it has in fueling the growth that we are kind of embarking on. So I think it's a reset that's happened for Coal India, the way it's happened for NMDC in the past, the way it's happened for NTPC in the past, that you move to a new band of value creation and you stay around there. You don't kind of come back with, people were expecting Coal India to see these sparks and then probably move, back to the 230 to 35 zones. But that's not going to happen this time around because everything, as you mentioned, is working in its favor, and the valuations have to kind of adjust to that. And the only thing that you need to look at, is whether Coal India is able to keep on growing at the kind of pace they've grown in the last, let's say, 24 months or 18 months sharply. So that is something which will decide the course forward. But I think it's definitely a new reset for the stock, and you'll probably see a new base getting formed from a valuation perspective at this levels.
Hey, Prakash, so very quickly, hi, good afternoon. Coal India is producing what NTPC is consuming. And my God, I never thought I'll see NTPC cross 2007-8 highs, at least in my career. I thought I'd retire before that happens. But guess what? It's happening now. Your thoughts on what's going on and how you would approach the stock?
So Surabhi, good afternoon. You look at what's happening in the power sector, and the biggest representation is from BHEL's chart. If you look at the change that's happened in BHEL, and you've spoken this quite often in the last month or so, because every time there is a news flow around this and NTPC issuing an order to BHEL, look at the level of sophistication of these orders. They're not substitution between a Chinese supplier and BHEL wins the order. It's about capabilities to grow the business to a different level. And when NTPC is looking at doing that, and smaller companies in the power stream are looking at doing that, you will have the entire ecosystem start doing well. So I think it's as simple. The consumption of power, the demand profile is so strong. And we've had various reasons to justify that. But I think more importantly is the economic activity levels that have changed everything in India. And this is only going to go one way, and that's up. So the likes of NTPC will have to shoulder the responsibility of supplying and sufficing for this demand. And hence everything around, whether it's BHEL, Coal India, GMDC, everything is going to kind of start participating at some point or other. What you would need to look at is how NTPC goes ahead in terms of its capital allocation, in terms of capacity augmentation, brownfield expansion. Some of those key things are what will change the structural nature of the stock and the business. From a balance sheet perspective, I think they're probably in one of the best spots, and that's why you see this lifetime high coming back or being created at this point. So keep the faith. The sector is changing, the environment is changing, and so will the companies and the stock prices.
Is the environment changing for good for L&T as well with these large orders? The Saudi Aramco, now analysts are saying for the full year, the company is likely to exceed its order inflow guidance of 10 to 12%. Now, again, the stock has rallied, but from here on, do you see L&T, comfortably crossing 3,000 anytime in the near term?
Very soon, Rima, very soon. I'll tell you why. It's a catch-up that it's playing. L&T this year has done so well because it was an under-owned stock. From the 2,100 zone to closer to, it's knocking the doors of 3,000 anyways. It's all about a re-rating that was overdue. They have changed not just the kind of conversion from order book to inventory or realization levels, but they've also changed the pricing. Look at how the margin profile has changed. If you plot that for the last 16 quarters, there's not a single instance where between 2 quarters they've actually seen any softness in margin. The reason is very simple. The order book potential is so huge, you can pick and choose what gives you money, what makes you good margins. And the Saudi Aramco order, what I liked about the way it's kind of structured, it's very time bound. It's not going to spill over into years because, you need to be careful with order booking, because if an order is huge and it's 5 or 6, 7 years down the line, it may not have an impact so much at this point in time, right? But these orders are very time bound and they're very clearly driven by milestone payments of what they deliver, which means that you keep on accruing benefits on the earnings side to the company from this order. So I think that, when people start digesting all of that, Rima, L&T has to get re-rated. It's already kind of made a lifetime high, or it's come back to a lifetime high. From a pre-corporate action, 4,400 was, I remember, the level, but today it's in that sense, it's already crossed that. So you will see that. The buyback is also always there to support it, but I doubt if it's going to be very successful given the salience around the stock.
2,900 now on L&T. Let's get some more stocks going. Havells is surging in trade. There is a UBS note today. Surbhi's been waiting by. She's going to fill us in with the details. Surbhi.
Thanks so much for that. So UBS met with the management of Havells and they have rated it a buy with a target price of 1900. They say the trends like rising quality and width of electrification for tier 2 and tier 3 towns and shift to consumers to multi-format retail is creating growth opportunities. Now they will, Havells management said they will continue to nurture multiple brands and they will continue in-house manufacturing as it provides internal efficiencies and also ensures product quality. Export will also be a key focus area for them. So they are focusing on all the activities which are margin accretive, and that is what the street is liking, and you can see that the stock is surging in trade today.
Okay, let's change sectors from Havells to BSE, Bombay Stock Exchange. Incredible run continues on this one, and I think Surabhi, there is a brokerage note as well which kind of talks about higher earnings estimates. They've upped their earnings estimates, and they're talking about, like a big what if BSE were to charge a higher fee, right? Because they charge, I think, 1/3 of what NSE charges, and it's a what if, of course. Go on.
That's right. So IIFL has written on BSE. They've upgraded BSE's FY25 and 26 EPS by 12 to 35%. Now, there are two main reasons for this upgrade. One, there is strong traction seen in the equity derivative segment. Now, as we already known, and we have been pointing out this entire week, that BSE has crossed the 5% market share in the equity options segment in just 16 weeks. And this was aided by the change in the days for the expiry. So the sensex contract expiry is on Friday, so that has worked in their favor. So IIFL says that a 1% market share gain will lead to an increase in 4% EPS. So that is one EPS accretive thing. Secondly is that their tariff increase must create value addition. Now, BSE currently charges 500 per crore of premium turnover versus 3,000 is what NSE is charging. So, if the tariff is increased from 500 to 1,500 over the next 2 years, given the strong traction in derivatives, it will result in a 12% change in the EPS. So, these are the two main reasons why IIFL has upgraded the EPS targets for BSE.
All right, okay, got that. Surabhi, thank you very much. Interesting note there. BSE has been getting a couple of upgrades in this last few weeks. We've seen several brokers come in and write positive notes. Prakash, any thoughts on either BSE or, for that matter, Havells?
I haven't had a chance to look at Havells in recent time because there's still this doubt whether the overhang from the Lloyd's acquisition is out of the way in that sense, because there are still some write-offs that could be impacted. But anyways, keeping that aside, on the BSE stock, I think very clearly the revision and the buyback levels itself was a clear demonstration from the management about what they believe is inherently the strength. And given the kind of cash flows that you're seeing with this broad basing of participation in the markets, there's no reason why they will not retain some pricing power. And more importantly, would be the kind of options volumes that were hitting only the NSE way also started kind of coming to BSE in a significant way. I mean, there's a huge change in mindset and activity there from in terms of the some of these weekly expiry options. So that is something which will give it a fair equitable ground to kind of grow its business in. And the new listings that you see, the IPOs, the SME platform, all of that is kind of buzzing. And don't forget the Star MF thing, which they still have a stronghold on, which can kind of keep on giving them a lot of annuity kind of business. So all in all, the revenue model is much more robust than what it was, let's say, 6 months back. And probably the price is coming back to what it is. And of course, the CDSL stake. But CDSL itself is flying away. So there's no reason why that will not also have a trickle-down impact on BSE. So I think some of parts, it makes sense. When you buy at this level, it gets a bit difficult to make money if something turns in the negative way. So I wouldn't buy afresh, but if people who have been holding it patiently have more reason to hold it.
Prakash, great conversation. Thank you very much for joining in. Enjoy your weekend. Right now, what's flying are the PSU names. So PFC, REC, 12 and a 10% respectively gain on them. Shipping Corporation of India is up 8%. Ircon has rallied 7%. BHEL, RVNL, IRFC, Coal India, NTPC, oil marketing companies, all the stocks are getting bid up quite aggressively right now. Get into a break. We'll come back and we'll be joined by Jigar Mistry of Buoyant Capital on the other side. Stay tuned.
Welcome back. Well, a lot of stocks are doing well, and one such stock is Welspun Corp. Now, JM Financial, they came out with a note. They have a buy rating on the stock with a target price of 550 rupees. Effectively, from the start of today, well, that would be a 60% upside, though the stock has already rallied big time in today's trading session. They go on to state that monetization of the ABG shipyard asset, well, that will be a further kicker for the stock. Now, two big reasons is what they are talking about for re-rating of this. One being, valuation-wise, it's trading at less than 5 times EV on EBITDA, which they believe is very attractive. The other factor is they're saying they're going to be driven by government orders and the geographies that they function. So that's going to be a positive as well. Now, just take a look at their forecast for the next few years. On revenues, they're talking about mid-20s growth. On the EBITDA front, they're talking about 60% growth. And on the PAT front, they're talking about 90% growth. How does this happen? Well, they're expecting operating leverage to play out, so that's where the EBITDA number will improve. And why does the profitability improve even more? Because they're looking at deleveraging their balance sheet, and they've already lightened their balance sheet from around 1,100 crores. The debt has come down to around 800 crores. And in terms of their geographic exposure, well, they're highlighting three broad points. The Indian government, well, they're targeting to increase the city gas distribution by more than 50%. That's what's going to, the key reason is they're looking at making gas accessible to 70% of the population. So that's about, the India government. The next part is on the global demand for natural gas. And they're saying in the US market, well, there's going to be a good growth opportunity for them. And finally, Saudi Aramco's capex of around $45 to around $55 billion. Well, that's going to bode well, and they already won a couple of big orders out there. So put all this together, JM Financial is very positive on the stock, explains why it's flying away. Well, Prakash Sivan is with us. Prakash, what do you make of this one? Welspun Corp, it's disappointed in the past, but it appears now that brokerages like JM Financial believe their time has come.
Yeah, I mean, the underlying businesses, the sectors, the segments that they cater to definitely give you that kind of a confidence. But whether, I would extrapolate this all the way to an earnings trajectory up to FY26, I'm not too sure, because there are lots of, issues that can always come up, and things can look very different given the kind of nature of the spend. But, Nigel, I just want to point out that the stock is, I think YTD or probably the last 6-7 months done about 80%. So, the time to buy these stocks is not when necessarily some brokerage report coverage comes, but it's when, you actually start seeing the change in the trajectory of the underlying business. Right? So, and that I think is way past. So you probably not have a very favorable risk reward, but yeah, I mean, it could continue doing well at a 22% kind of a CAGR in terms of growth, which at some point will get captured in the stock, but not necessarily on a linear basis.
Okay, Prakash, good speaking with you, and lovely having you as always. Have a good weekend. Jigar Mistry is with us, co-founder of Buoyant Capital. Jigar, thanks for waiting. Appreciate you joining in on short notice. Let's just start with your thoughts on what we're seeing, which is absolutely spectacular price action for not large caps, but just below large caps, right? I mean, mid and small and micro, smaller the better. And you and your fund, which has done well over since inception, you guys have done very well. You guys are turning cautious. You are bottom-up stock pickers. Look at largely opportunities from mid caps and small caps as well. Looking at stocks that you've owned in the past, but now you're moving into large caps. Tell us why.
Hi, Prashant. Good afternoon. Thank you for inviting me, as always, to your show. But see, come to think of this, right? India is in a superlative place over the next 10 years or so. But look at what's really happening in the run-up to that sort of, long term. Any sort of news is being taken as a positive news, right? So you have promoters selling. They've sold, I think, 2x in 6 months versus the 3 years average for full years. So that's taken as a positive, or a lot more float coming in. You have, large P's selling out a tech business. The stock ended 10% that day up. Again, more float, overhang gone away. Good results are obviously good news, but bad results are also taken as good news. Contract wins are essentially leading to stocks getting re-rated. And people have started discounting F26, F27, 28. So I think all put together, we are of this opinion that, yes, in the longer term, it does make a lot of sense. But in the run-up to it, you might have a scenario where you could, take a pause before the things become a lot more clearer. Effectively, building off a 5.5 US Fed fund target rate. And then, you try discounting it back to an Indian corporate discounting rate, and rates could stay higher for longer. You try putting that in your DCF models, you will find a very different picture. From there, you get to India-specific issues. Crude has rallied to almost 90. That's a $17 run-up, effectively $35 billion in annual payout higher. Secondly, you also see this scenario where the Fed fund target rate and the repo differential is now only at 100 basis points, which is the lowest it has ever been. And $274 billion worth of short-term liabilities will get, fructified. So that needs to be taken into account. Rainfall has not been ideal. So at least the eastern part and the southern part, you are seeing a 16 and 17% sort of deficit flow through. Kharif season sowing is happening. So that's very important. So I think all of these, yes, it's a great story in the long term, etc. But one needs to be a little more cautious, especially the way in which you are seeing the actions in small and mid cap. So we have, as you mentioned, we have always run it as a flexi cap fund. There were times when we are predominantly large caps, times when we are small caps, and we are turning into large caps as we speak.
By the way, some big news which can boost India's AI revolution. Reliance and Nvidia are partnering to advance AI in India for India. If you remember, even in the Reliance AGM, Mukesh Ambani spoke a lot about AI. And I remember he said that 7 years ago, we had promised telecom, broadband connectivity to everyone. We have delivered. And now our promise is to give AI to everyone, for everyone, and we will deliver. He spent a lot of time talking about AI, and this appears to be one big step that Reliance Industries is doing to build that digital infrastructure.
Rima, I just want to comment on the press release, on the specifics on what this alliance entails. I mean, what we have right now is this press release from NVIDIA. What the company is saying, and this is a joint press release, I mean, obviously they're mentioning Reliance in it, the companies will work together to build AI infrastructure that is over an order of magnitude more powerful than the fastest supercomputer in India today. NVIDIA will provide access to the most advanced NVIDIA GH200 Grace Hopper superchip. So basically, NVIDIA gives access to this superchip and this technology to Reliance. What does Reliance do with it? It goes on to say that to serve India's vast potential in AI, Reliance will create AI applications and services for their 450 million Jio customers and provide energy-efficient AI infrastructure to scientists, developers, and startups across India. So two-part, Reliance uses some of this technology for its own customers, its data and telecom customers, and it also provides energy-efficient AI infrastructure. Remember, I mean, Reliance has its own huge plans in new energy to support the supercomputing architecture and infrastructure that is being set up across the country. So this is pretty phenomenal. And of course, Prashant, being our resident NVIDIA expert, someone who loves to read more about the company and the absolute phenomenal moves that it has made, the moves that the stock has made. By the way, the stock is finally reacting as well. I mean, it's not an alliance to immediately set up this, super chip by Reliance just yet. But it's an alliance to partner and move forward, taking AI in all its formats. I mean, in telecom and in data, in new energy, and in so many other verticals. I think this is being read really positively by the market.
And there's great demand for NVIDIA chips, and that's why NVIDIA is...
wants to be in this country.
$1 trillion market cap, Surabhi. Trillion with a T. And so this is interesting the way.
So ChatGPT is a large language model, right? Bard is a large language model. So what the press release says is that they want to develop India's own foundational large language model based on our regional languages, the diverse languages. So I think, by doing that, they're trying to use all India's, regional data so that you can cater to everyone.
The reason you need NVIDIA chips to do this is because they are high processing.
They can process it, they can compute it.
They were largely developed for gaming and now a very high processing power. I actually, when I first saw it, I thought it's like for a chip design and stuff. That would have been...
Exactly, that would have been absolutely phenomenal.
This is, I guess, a start, and that's what's coming through. 0.75% higher Reliance. I mean, not that the market needed any help, but it's a bit of a push coming through on from Reliance as well. 19,800 is what we have now.
Okay, Jigar has been waiting by. Jigar, wanted to get your thoughts on one stock that you've consistently been holding in the IT pack, and that's Cyient. Now, Cyient has done very, very well. Year to date, Cyient has given you a rally of 120%. Yet, despite that, it's still much cheaper than peers like an L&T Technology, a KPIT, Tata Elxsi, which largely operate in that whole ER&D basket. The question is, do you see more upside in Cyient from here on? Are the valuations okay still? How do you view Cyient after the kind of rally that we've already seen?
Right. So I think, it is still an interesting business model. And when we bought it, I think it was at the peak of the COVID scare. That's when we actually increased the position a lot more there. And since then, I think that new sort of things have kept on emerging. So whereas the large IT packs have seen some amount of demand pressure come through, here you have had the DM, LLM sort of the subsidiary get carved out of the main business, and then that got separately listed. And then the key businesses, if you hear the management commentary, has continued to remain a lot more positive vis-a-vis everybody else. And there has been earnings upgrades as well. So as you speak, you have a scenario where the valuations are, I think, 22 times, 23 times F25, and then going forward much lower. I think it continues to remain an interesting business model. Viral tracks it from our team. But we continue to own that as we speak.
Okay, that's a word on some of the IT names. Jigar, hi, good afternoon. I think this market has been trying to wrap its head around this massive PSU rally that's played out, right? Anything that has the government of India as a shareholder just touches stratospheres. What have you made of this trend? What is the caution, if any, that you'd like to put on the table? And which of the stories that are perhaps still good for more? And then we need to be prepared for that.
Hi, Surabhi. Yes, so I think you have the PM sort of green lighting the whole rally, then you do come to expect a little more out of it. But I think this entire market since, since I think I can remember, it has always operated on narratives. And then narrative keeps playing out. When it starts, it's reasonably attractive. So you look at the 14 to 19 consumer rally, or you look at the 2000 to 2008 rally there. You ascend the power sector rally. It starts with, something being very compelling till the time the entire street buys in, and then it goes towards something which becomes unsustainable at the end. A lot of sort of PSU businesses, given the orders that they are getting, the railway capex, the sort of entire ecosystem around railway capex, that's done fairly well. The banking system, I think overall, PSU or otherwise, is still a very interesting lot to sort of keep looking at it. And I think there eventually will come a time when it becomes a lot more unsustainable. But right now, a lot of businesses, especially in the financial space, are very interesting to look at.
Rapid fire, Jigar. Have you looked at PFC REC?
No, we don't have it, Prashant. Sorry.
Okay. You like MFIs, right, within the financial SPAC?
Yes. So MFIs are interesting because there's a cycle over a cycle. So financials itself is a cycle. Within that, MFIs are a lot more constricted cycles. So that timing is still reasonably decent. So that's a space we are interested in, yes.
Okay. Now, mid-cap IT, we kind of briefly touched upon with Cyan there. You own hotel names, Jigar?
Not in a big way, Prashant. So that's an interesting theme, and okay. ARRs will keep rising. The smaller, the better, basically. We have some exposure there, but not very meaningful.
So if you had to rank the preference right now in terms of sectors, subsectors, just list them out, the top 3 or 4 areas, pockets.
So financials are very interesting. Pharma generics are very interesting. Cement is one sector that we are very happy with. Hotels is interesting. And I think let's not forget cash also increasingly gets very interesting by the day.
Okay, all right, Jigar, thanks so much for stopping by and giving us your view on a whole host of stocks as well as sectors. Wishing you a good Friday evening ahead. But the markets, well, they're parting. They're already up and about, up close to around 110 points, the Nifty. Come off a little bit from the top, but it's a good session. Good time to get into D-Street chatter. Nimesh is joining me as well. Nimesh, what are you picking up in terms of DD room action?
Well, Nigel, second day running and we're up 100 points. So that's the momentum we are talking about. And to me, it looks like it's a purely technical-based rally. For the last many days, I've been saying this about 19,550, 19,600. You'll see a big rally on the upside on the breakout. So that's clearly playing out as far as the Nifty is concerned. Even in the broader market, that's been in a sweet spot and that continues the big move. But look at today's FNO setup. 8 out of top 10 stocks are the PSU stocks. The PSU index is up 2%. And this is a phase when the stocks will move up and you won't have any reasons for it. Yeah. Today's move in REC PFC, there is no large flow. Of course, there are some flows from some domestic fund. I'll cover in the daily room chatter. But broadly, there are no fundamental reasons to it. There is no news to it, and the stocks are moving up. There are so many stocks in the top 10 FNO stocks within the PSUs where there are no specific reasons and they are moving up. So this is a phase we are in, and probably this is going to continue purely from a technical perspective. Even in terms of flows, again, it's a mixed day. It's not suggesting that the flows are so strong that it gives a 100-point rally on the Nifty. Yeah. So that's the kind of flow, but still markets are in a momentum. Looks to me like after this RBI, clarity on the incremental CRR, there is a feedback that maybe you'll see some incremental, buying into the bank stocks now. So banks could actually lead the last leg of this rally from here on. So that is something to bet on. But broadly, I guess it's a momentum which is clearly playing out in the PSUs, but the flows are not that strong, which supports a 100-point kind of rally in the Nifty.
If the Nifty bank is going to perform, then 20,000 is on the cards next 1 or 2 sessions.
Technically, everybody's been talking about, right?
1 or 2 sessions. But what about individual stocks? What are you picking up?
A lot of names. So my first stock on my list today is Transformers and Rectifiers. A big move on that stock. Stock is up 15% on good volumes as well. The board, there is a board meeting scheduled next week for a fundraising, and I believe some influential HNI investors are going to invest in, hence a big move in that stock in today's stage. So that's the first one. The second stock is Cholamandalam Investment. Again, a big move in that stock within the NBFC space, good volumes as well. Again, in Chola Investment, there is a strong indication that the fundraising via QIP is likely to come next week. So that's the reason why that stock is excited. The third stock is PFC REC. We briefly spoke about big moves in that stock. I understand the large part of selling seems to be over, and some domestic mutual funds are quite active in PFC REC for the last few days. The delivery volumes have been quite high, and that's going to be the trend in today's trade as well. So that's those two stocks. And the last one is VRL Logistics. There was a large block in the morning trade. Nearly 4% equity got changed hands. And I understand the promoter entity was a likely seller. A bit of a disclosure, it's not confirmed yet, so I'm just going by my sources, but that's an indication that maybe the promoter entity was a seller in today's block in VRL as well.
Okay, got that. Lots of buzz as always. Nimesh, thank you very much for all the action and the excitement, the chatter from dealing rooms. We'll take a quick break and then we come back and get you, as usual, the trading calls for the last half hour and how you can look at positions for next week. The last time the stock market had an intraday high above 19,800, it was around the 27th of July, if I remember the dates correctly. And that was a down day. It was a big red bearish candle and we ended up closing well below. So it was a day where we lost about 200 points on the Nifty. Today, it looks in all probability like it's set for a close above that level of 19,800. Been quite the day. Mitesh Thakkar is back with us. Mitesh, final thoughts then. What a rally, what a Friday. What's the advice as we get set for the weekend?
So I think, very clearly, looking at the strength towards the closing, especially on the Nifty, the Bank Nifty is still about 200 points off the day's high. Nifty also about, 50-odd point from the day's high, but still looks better than the Bank Nifty. So I would suggest two BTST calls. Hero Motors is a BTST with a stop at 2989 for targets of 3035. And the other one is Shriram Finance. I think that's closing at the day's high. That's a BTST with a stop at 1940 for targets of 1980.
Okay, well, thanks very much, Mitesh, for that. We'll come back to you. There's 12 minutes to go for close. Now, the two-day G20 summit is set to begin tomorrow, and before that, there is a flurry of diplomatic activity in Delhi. Leaders of 20 nations and 23 international organizations are arriving in the capital. The Prime Minister has a packed agenda. My colleague Parikshit is standing by at the Bharat Mandapam at the G20 summit venue. Let's go across to him to get a ground check in terms of what's happening. Frenetic activity, Parikshit, as we understand it, and as the visuals suggest.
That's right. And currently, the G20 press conference is going on. You've got the likes of the Foreign Secretary, the Secretary DEA, Amitabh Kant, the G20 Sherpa, who are inside that hall. You can actually hear them speak right now. They're taking questions from the media. So they are listing out priorities that India had for the Global South. And Amitabh Kant has said that India has emerged as a strong voice. And when we see the final declaration, we will see the strongest statement in support for the Global South as yet. We put an ambition forward for increased climate finance and increased technology transfer for helping countries like India and other developing economies with their energy transition. I'm inside the International Media Center right now. Let me tell you that this media center is 30,000 square feet, and that's just one hall. There are two halls where the media center is spread out. This briefing room that is right next to me right now, that has a seating capacity for at least 600 people. I'm going to take you inside as well. And there are kiosks here. There are kiosks in the media center where you can use QR codes to actually scan and get all the information. It's not working currently, but yes, those QR codes are available. Lots of media. Just take a look. This is the media center. That's the press conference which is going on right now. There are screens outside where people can view them as well. There are 3,500 journalists who have accredited for this event. We don't know how many will actually cover, but there are around 1,300 workstations, high-speed internet connectivity. All of that is there for the delegates and also for the journalists. A complete vegetarian affair as far as food is concerned. And there will be a vegetarian affair for the gala dinner for our world leaders as well. ITC is the caterer, and we believe that there will be millets on the menu. There will be a lot of street food as well, cuisines from different countries. Now, as far as the deliverables go, there is a lot of conversation on having debt restructuring issues resolved for countries like Zambia, Ethiopia, Ghana as well. Finance Ministry sources telling us that we have achieved some amount of consensus there. There had been pushback from China, which wanted the MDBs to take a haircut on loans. On climate finance, we hear that countries like China and Saudi Arabia are yet to come on board. So let's see what happens. We have an ambitious agenda when it comes to climate financing. Prime Minister in his blog has said that every country needs to contribute more, especially developed nations need to contribute more when it comes to financing the energy transition of developing countries. Whether there can be a communique or not will be crucial. And all of that depends whether there is consensus on the Ukraine-Russia war. That remains the sore point in the room. Russia and China, we believe, have backtracked on the Bali Declaration. And Amitabh Kant, who's speaking right now and who's speaking inside to the media, is trying some formulations which will be agreeable to all leaders. So these are the views coming in from the media center. Let me quickly show you and get you a sneak peek of the press conference that's on currently. We'll have to be a little quiet, but yes, you can just see the amount of attention that is here in the room. This is media from all across the world which has come here to cover the G20 summit in New Delhi. Amitabh Kant, Vinay Quatra, the Foreign Secretary, Ajay Seth, the DEA Secretary, Harshvardhan Shringla, the G20 Chief Coordinator, they're all here. Let's come out of this room now as this press conference is underway. The other big press conference will be the G20 Presidency press conference that will take place on Sunday at 1 p.m. That's when we'll first know the outcomes of this major G20 meeting. Next 3 days will be packed for the Prime Minister. He receives delegates at 8:30 a.m. in the morning. That will be a 1-hour meet and greet after which the first session begins. There's going to be a working lunch. The working lunch will be followed by a second session, 15 bilaterals. Today he's meeting President Biden in the evening, also the President of Mauritius, the Prime Minister of Bangladesh, and a lot of important meetings will take place between other leaders as well. There will be a flurry of press conferences, so a lot of activity, a lot of high-level networking here at Bharat Mandapam in New Delhi.
You know, Parikshit, thank you so much. You literally got us there. So big thank you to you. We feel like we're actually there at the Bharat Mandapam. That was a fantastic wrap. And I'll tell you what, that kiosk did work behind you. You were speaking to us. We could see it. It took some time, but that kiosk was also working. Really hope that in all of this, hectic action, you get to sample some of the great food that you just described to us. Well, have a good one. And thank you very much for getting us the latest. Well, there you have it, all the buzz from the Bharat Mandapam as India gets set to host the mega event, the G20. We'll take a break on that note. On the other side, we'll come back with more market talk, and Amrish Baliga will be with us.
Welcome back. Few minutes to go to close what has been an exceptional week for our markets. Amrish Baliga is here with us. Amrish, sorry we've got you on a day where there is very little time, but you want to tell us about your pick for the day, Grindwell Norton?
Yeah, my pick is Grindwell Norton. That's a market leader in abrasives with nearly 27% market share. And now they are majorly into performance ceramics and plastics. That's about 42% of the revenue currently, expected to still move up. going further. They also have a small IT services wing, which is about 10% of the revenue. So traditional business of abrasives is expected to grow just in line with the market, so single-digit growth. But the actual growth area, like I said, would be ceramics and plastics, which would be catering to segments like life sciences as well as electric mobility. We have seen strong free cash flows consistently for the last 10 years with high margins of about 16%. They've doubled their revenue in the last 6 years. Though the last quarter was a bit subdued and because of which we saw some correction, it is expected that the revenue CAGR going ahead would be about 21%. EBITDA CAGR should be about 24% over the next 3 years. A net debt-free company with double-digit return ratios. So expected EPS for FY25 is about 53. And like I'm having a target of about 26.50 for the stock.
Okay, Amrish, very quick conversation today. Apologies for that. We'll speak in detail later. But thank you for joining us. Nevertheless, appreciate your time here on CNBC-TV18. We are just a minute away from closing, and there's going to be a good closing. Although, at one point it was looking even more promising. It was looking up 130 points, but we are up 90 points. So 19,820 is where we are at. And you've got, I think, the broader market, which has done very, very well once again. For the week, I'll just actually quickly run through the weekly changes. The Nifty is up 2%, I think in line with what we saw last week. The Bank Nifty ends up 0.6%. It came off actually, from the highs of 230 or so. It actually sold off. The Nifty Bank sold off 200 odd points. For the week, the Bank Nifty is up about 1.6%. Let's just look at the mid-cap and small-cap indices. Mid-cap index for the week is up 4%, and the small-cap index is up 3.5%. So, for mid-caps and small-caps, in just 2 weeks, you roughly have between 6 and 7% gains. So the run continues, in a non-stop kind of a way. Rima.
Well, the week belonged to the PSU stocks. The Nifty PSC and the Nifty CPSE index has rallied 6% this entire week. In terms of individual big movers, Coal India for the day, Coal India for the week. For the day, Coal India is up 2.5%. For this week, it's up 19%. NTPC was another smart mover. In fact, that goes home as the top Nifty gainer. A couple of the other big movers include a BPCL, IOC, ONGC. So across the board, it's the PSU stocks with C buying. L&T continues with its up move. This week, it's seen a 7.5% gain on the back of a possible order boost, a very large one, and L&T got bid up. On the losing side, softness seen in Eicher Motors, UPL, Apollo Hospital sold off in the last 1 hour, and ITC goes home with a bit of a cut.
Well, okay, on the mid-cap side of the market, let's not forget the mid-cap index has outperformed yet again, about 1% higher. And lots and lots of names flying around. You've got some of the PSUs, of course, like PFC, REC, 9, 10, 11% on these stocks. Aircon, RITES, Shipping Corporation of India, Mazgaon Dock, IRFC, RVNL, BHEL. It's just, it's a absolutely frenetic, absolutely maddening almost PSU rally that's been going on. That's been the rush that we've seen. Beyond that, Sobha reacting well to some brokerage notes, about 10% higher on that stock. A couple of other names like Graphite India doing really well today. And some of the names like Equitas Small Finance Bank, IEX, Lemon Tree. These were also up and about. Very, very strong day for the market. No taking away from that. BSE, by the way, stock we were discussing on the back of another positive note, this time from IIFL. That stock's closing up with a gain of about 7% thereabouts. So very, very strong day, and we will get a close. In fact, we have closed now 19,819. The first time that the market has managed to close above this mark since the 20th of July. That's the time we made the intraday all-time high of 19,991. And then, from there, the market was struggling. Let's see, second time around, whether the next week has some more good news in store for the bulls. Well, with that, we are out of time. The bell has gone, and it is a wrap on this week's edition, today's and this week's edition of Closing Bell. Thank you very much for being with us, but don't go anywhere. Our Friday special, Smart Money, is coming up next.